What's going on, guys? Welcome back to the channel. In today's video, I have a very special guest, CastilloTrades. We're going to be going over some analysis, our current takes on the market, how we've been looking for setups lately. Good to have you finally.
Appreciate you, Woods. I've known you for a long time, so I'm really happy that we're able to kind of get on here and chat a little bit. But Castillo Trading over on X. I've been over on X for many years throughout multiple cycles of crypto and Bitcoin and all that sort of stuff. So yeah, I thought it'd be important for us to kind of jump on here, talk a little bit about the markets, what we're looking at for both BTC, Ethereum, macro, intraday trading levels, day trading. There's so many different types of ways that you can trade. So it's great that we can kind of connect and talk different strategies and kind of how we're looking to perceive the markets going forward.
Yeah, no, for sure. Like I said, I appreciate you hopping on. You're one of the few here on CT that are actually grinding every day, and you have been for quite some time. I think that anybody that is building and providing consistency in that sense is going to make it. It's not our first cycle. Obviously, the current aspect of the market, we're super choppy. Things are moving around, super compressed as of lately. How do you, on a daily basis, seek your setups in this landscape?
Yeah. I mean, it's difficult, man. It's really tough to kind of find, a good kind of format or like a good edge when markets are just kind of going sideways. I think majority of the time, most people want markets to go straight up. I saw a stat the other day to where it's like, 80% of the time Bitcoin is going sideways, right? So that's kind of the approach that I take to trading is I like to be like a range trader, right? Not being too bullish, not being too bearish, still kind of given the opportunity to short when it presents itself and then still given the opportunity to long when it presents itself as well. Because, if you're a super bullish or bearish heavy trader, sometimes you get to miss kind of the other side, right? So kind of coming to the table with like no bias as I'm trying to be a long trader, I'm trying to be a short trader, you can really kind of help capture those pivots. And so, that's why I do like range trading the most. I'm not the best trader in trending markets up or down, but when ranges start to formulate and things start to go sideways, I think that's where like I kind of like flourish a little bit, right? Because then you can kind of get in at certain price points that make the most sense. And the way that I do that is I just do like basic, premium and discounted price levels. There's so many different ways to trade, right? There's indicators, SMAs, EMAs, people look at like volume profiling. A lot of people will, have divergences or OBV, RSI, all this shit kind of integrated into it. And I've been a trader that's kind of like looked at all that shit in the past and all that stuff in the past. But the one approach that I've always taken is just like keeping it simple, like keep it simple, stupid. And that's kind of basically just like locating basic support levels, basic resistance levels. And then once you can kind of identify those levels on the chart, it's very easy to know where you long, where you short, because a lot of people will start to kind of jump into a trade at resistance to the long side. But for me, it's like I'm kind of the opposite, right? Once things start to get into resistance levels, that's where I look to be taking profit, or that's where you look obviously to be flipping and shorting. So once you can identify those levels on a chart, I think it becomes a little bit easier for people to understand where to long, where to short. And then also like, where to dollar cost average in, where to dollar cost average out. I think that the main problem that most people have in trading is that they, want to go all in at once with their whole stack and then go all out at once with their whole stack, right? And then just kind of make that percentage in between. But if you can kind of bring like a more patience approach to it, it just works a little bit better because then you can scale in and scale out. The timing doesn't have to be perfect. Here on my chart, the way that I look at that is I just look at current range trading, right? And current range trading is very basic. You have upper limit, median ML, and lower limit. And the way that I look to do it is kind of be longing the discounted price levels. So the discounted price levels are going to be between median ML and lower limit, and that's kind of where you look to be building longs. And then when you can identify where premium price levels are, that's where you're looking to take profits within those levels. And then also that's where you can kind of short, because premium prices is kind of where you want to be shorting since the price is higher. You don't want to be shorting when price is lower. And then to the long side, same thing, right? You want to be longing discounted prices and then taking profits at premium prices. So it can be a little bit scary at times because not a lot of people like to long into the red days. But I find it a little bit more beneficial when you get those discounted prices while everybody else is kind of freaking out.
I find I do the bulk load of my trading, and my highest hit rate is when I am able to set plans beforehand and I let those plans play out. And I think that a lot of these ranges allow you to do that. The problem with the most recent ranges that we've been seeing, especially since the initial wick low that we have right now below 60K, is that these ranges get very compressed. And when you're playing things on an intraday level, you tend to want to get in and out of positions like you once did when price was super volatile and moving. When as right now, Positions that pay are the ones that you're super patient for. And I think that it's really however you look at things, right? You say you like to look at POCs, but all that begins with levels. You need to understand where price is trading around. I like that you're super patient in your approach and you're willing to play things when they come to your levels. Tell me how you're able to identify when you want to get in and out of a trade. So let's say you're entering in on a POC that you were super patient for. That POC hits and we're not seeing any sort of strength for a couple hours or whatever the case may be. What helps you change your opinion and sort of see the POC under that?
Yeah, no, that's a good question. I get that question a lot too, honestly, because a lot of people are like, oh, well, what if this fails or what if it deviates below? One, I mean, I think like the main thing is like risk tolerance. So I do think that's one of the most important things when it comes to trading. Like you got to know your risk tolerance, your risk levels, what you're willing to put into a trade, what you're willing to not put into a trade. And, that's first and foremost. I piggyback off TraderMain a lot because a lot of the times it's not really about the leverage you use, it's the overall position size you use. So just looking at my chart here for an example, we can look at, some NPOCs that I'm looking at right here. And one is 73K and another one is 64K. But if you kind of like break it down, that's exactly where kind of the range is kind of formulating, right? So 64K is right around that lower limit area. And then again, above that 73 is kind of around that upper limit area, right? So we're still kind of just like ping ponging within this. So we've almost closed out 64,979 on the NPOC chart, but we kind of front runned it a little bit. So that's still an indication to me that I do think that price is going to come back down and retest that range low at about 64K, maybe 63K. Granted, it fills some of this wick that happened a couple of weekends ago. So, it just depends. I sometimes like patience. A lot of people want these levels to hit and it bounce perfectly. And then, they make 20, 30, 40% off that bounce. When the reality is sometimes you can have a little bit more patience to kind of just be building within that, right? So dollar cost average in, scaling out, you may take 3 or 4 different adds to that position over the course of, 5, 6, 7 days. So sometimes I like when we get those discounts and we revisit those lower levels. The one thing that you're going to always have, and it's always going to be different, right? Because my risk is different than your risk, whose risk is different from, someone who's a billionaire or from someone that's trading $1,000 portfolio. So I think people are at a disadvantage when they try and copy someone and their trading identically, right? Because then, maybe, my starter position is $1,000. Well, I could probably eat a 50% drop on that $1,000 because it's only $500, right? But if someone has a full account and all they have is $1,000, that 50% drop may be like detrimental to their entire trading portfolio. So that's why I try and let people know is like, focus on the setup and focus on building your risk tolerance. So once you do start to get into some lower limit levels, which is the discounted price point, I am okay with price kind of staying within that area for some time. And then, and then you just kind of have to see how, the reaction goes. A lot of people want entries, take profits, stop losses. And I usually start to gauge and put in a stop loss to my trades and to my position sizing when my position size is completely full. So an example of this is, let's just say the position size is 10K. But it takes me 5, 6 different entries to be adding in the lower limit discounted price to get to that 10K. Once that 10K position size is full, then I'll start looking for, okay, where's the stop going to be? Maybe it's the swing of the wick. Maybe it's the swing of the lows. Maybe you can even just throw like a percentage on it, right? Like, okay, 5%, once this is down 5, 10% of the overall position size, then that's when you cut. Because, I've really been that trader in the past where you kind of like bleed your account of 1,000 cuts. You jump into a trade, you have that hard 2, 3, 4% stop loss and it hits every time. And then the price does start to rise in the direction that you want. I think that's a normal story for most traders when they get involved. And so that's kind of why like I don't like 2 to 3 percent of the portfolio or position size is your automatic stop loss. Because I think we know market makers can kind of swing this. They see where everybody's stop loss is. You don't want to be giving up where your stop loss is to these guys because then they can kind of run it and then move in the opposite direction because that's where they make their money. So I'm kind of in the mindset of like, look, low leverage, larger position size, but kind of build that position size over time. You don't have to go all in at once. And honestly, the longer that price does actually trade down at lower limit discounted prices, the better, because then you can get a better overall average. And sometimes that could be uncomfortable for people, right? Because a lot of people will, sometimes be down on a position and they'll exit it right away. They don't really give the trade kind of time to formulate or time to develop. It's just, oh, I'm down 10%. Instead of dollar cost averaging, I'm just going to cut it here. And then they'll look for re-entry. And honestly, to each their own when it comes to strategies too. You just got to find out what works best for you. Some people like to go really, really heavy for like 10 minutes and kind of capture their money and then get out. That's totally cool too. But, as a trader and as everybody kind of develops and learns their own trading style, I think that you should kind of be open to, the way everybody does it. Because, there's a ton of people that are successful doing it multiple hundreds, thousands of different ways. It's just like, what's going to sit better with you? What's going to sit better with your portfolio, with your risk management, the way that you like to trade things? So I think that's a really good question, Woods, because, there's so many people that kind of just don't want to do the work to do what fits them. Because everybody's going to be different. There's so many logistics within all these different types of traders. I like to say that trading is like golf, right? Like whenever are you going to be, your golf ball is going to be stacked on somebody else's golf ball and your shot is going to be exactly the same. The course is too big. There's too much landscape out there. Everybody's, different strength. People use different clubs. So I really kind of like to use that as a good analogy to be like, there's no golfer that's going to hit every shot the exact same as somebody else. It's always going to be landing in the sand, or someone may hit the green, or someone may be in the rough, or they may lose their fucking ball. So, that's why copying someone exactly the way they do things can be a little bit tough. But as a trader, you want to just make sure that you're doing your job to kind of, cater to what fits you the best.
I love all those takes. I relate with a lot of things you say. There's a huge reason that I follow you now. It's because I'm learning every day. I'm still a student of the game. And the only people that are going to tone me into the trader that I want to be and the trader that I hold myself accountable are people that I look up to. And there's very few that do it the way that you do it and the way that I've seen you do it for quite some time. So how do you find coins that interest you?
Yeah, it really depends, man. Like I think especially during this cycle when it comes to coins that I'm looking at, a lot of it depends on like what's hot, right? A lot of the times I don't pay much attention to meme coins, but meme coins actually can fucking really move, and again, yes, it's good because it moves to the upside, but it, can also really move to the downside as well. So when it comes to like setups and coins that I'm looking for, it's just like what's hot at the time. There's a lot of people that'll talk like when the privacy sector went off, right? It was important to focus on the privacy sector, because that's just how it was. That's where the money was flowing. And now, like, are you going to capture every single trade and every single coin perfectly? Absolutely not. You rarely do, right? So it's just looking to kind of see where your edge is. So right when Zcash started taking off, I traded Zcash. I missed the entire first initial move. But once it started retracing, once it started ranging, then I was able to kind of capitalize on that. So that's kind of like where my focus is when it comes to, finding those new coins. And then like Hyperliquid as well. Obviously there's ones that you just want to pay attention to all the time. Hyperliquid is definitely one of those coins. It doesn't mean that they trade the best all the time, but I think that when there are coins out there with that narrative, Hype has been kind of the winner this year. And even like Aster too, right? Aster has been one that has really kind of pissed people off a lot because of everything kind of going on with CZ and it being one of those like competitive coins to Hype. But Aster can move sometimes, man. And sometimes it's about taking your setups, right? When I look at, at the chart, it's more like, still taking those range plays to, things like Aster. And then also what helps me too is, I don't know if you have like a daily scan or a weekly scan that you do. I'm sure you do. You can just look at like bubble maps, right? You can look at bubble maps to be like, what coin is hot for this week? What coin has put up the highest upside for this week? What coin has put up the highest downside for this week? So, ZRO is a good example too, because it kind of just started to get hot. And so that's when it's like, okay, I'll pay attention to it. I'll see what's going on. A lot of people on crypto Twitter are shilling it, Pippin, same thing. And so I kind of just look at it that way. Like I use the resources that I have. I think X is a great resource because there's so many people on there that are talking about certain things. You don't have to trade it the way that people want, but as long as you can put a focus on it to remember to like keep tuning back to it. That's kind of way that, the way that I do it. I don't have really any coins that I've like fallen in love with. There's been some coins that have made me a lot of money that are now down 90-95%. So it's not like holding on to those and like hoping for a bigger bounce at some point. It's just, kind of focusing on where the hot topic is. And I think like for me, the two that I probably trade the best are Bitcoin and Ethereum. I just think that they've been the ones that have been like the clear winners within the crypto space since inception. And so I can just get like a better read on that. And then once you see like Bitcoin and ETH, you see like there maybe a bounce or maybe a potential move to the upside, then that's when you can start looking at altcoins. Because I think a lot of people will also like jump between all these altcoins and fail to look at what the king is. And the king is going to be Bitcoin. Regardless if that altcoin setup looks amazing, there's been a few outliers this year like Zcash, obviously, but it's going to move the way that Bitcoin moves. So if you think that Bitcoin is going to drop, but you have this set up on an altcoin, so you jump into the altcoin, it's like, is that really the best thing to do? You really have to focus on King Bitcoin. So yeah, when Bitcoin starts to look like it's going to pump or it is pumping, then you can kind of start to focus on some of those altcoins or meme coins or, trench plays, whatever. I know that there's so many different ways and so many different areas that you can kind of focus on. I've never really been like a big trench guy. I've just focused more on like, BTC and Ethereum because I think they put out the cleanest ranges. I think they put out the cleanest entries as far as longs and shorts. And then again, that's, where I kind of perceive my levels on. But if they look great, then I'll start to like transition into some altcoins, seeing what you're talking about, seeing what fucking, John is talking about, or any of the other homies that, you kind of respect in the space, what altcoins they're looking at. You can really, you can get a really good sense on kind of where that focus is.
Whenever we have a position that we are at in the market, it's easy to not want to look at things. Like I was talking to you about before the video. It's a crab market. It's not moving. It's extremely tight right now. We are trading below 2021 cycle top, which I keep bringing up and I keep reminding myself we are at a point of inflection, whether you like it or not. 2021 topped off at 69K. It's a psychological level. These levels matter. And just like you said, just keep reminding yourself, keep checking back. It isn't moving today. It might not move tomorrow. It might not move next week. But at some point, price is going to be $10,000 higher or lower than 69K. And it's our job as traders to catch that move. We might not catch the top. We might not catch the bottom. But we are going to catch something in somewhere, and it's up to us to do it. How you do it, that's on you. Not any one trader is going to trade alike. There's a lot of confluences and a lot of levels that we can tie in together. I don't trade POCs like you do, but I'm very intrigued when you do post. I know it matters for me because I know a lot of the things you're looking at, and I've seen you for quite some time. So if you're going to post about something, I'm going to look and see, is it looking with what I'm looking at in my analysis? And that matters to me. And with that being said, I'm interested to see what you have to say about the current aspect of things. I know you brushed up a little bit on the POCs that are defended right now, some POCs you're looking at. So how are you looking at things on an intraday sort of aspect as we are chopping in this compressed area of the market from 60K to 72.2K?
Yeah. You make a couple of good points on that. Like one, I like, that you've kind of said, you got to keep learning. Like you cannot be the one person out here that thinks that their, strategy is the best or their edge is the best. I've always been very open to what everybody's doing. Not everybody, but at least, okay, if this works for this person, let me look at it a little bit. Let me pick it up. Let me be interested in seeing why they think it's like so good. Because, at the end of the day, there's always going to be someone a lot richer than us, a lot more wealthy than us, and a lot of people, that are, less wealthy than us. So, being like an open book for any strategy, I think is key within markets. You can't be like hellbent on just thinking that one thing is going to work 100% of the time, because it may work during certain conditions, but conditions definitely shift. And, environmental sentiment is something that's important, like bearishness, bullishness. That kind of gets me into my next point of like anchor charts. So I kind of create what's like an anchor chart, right? So this kind of gives me the ability to have, a bias in whatever time frame it is. Most of the time the anchor charts are on like weekly charts because it's just like a higher term time frame that you should see. If it's above this level, you should be a little bit more bullish. If it's below this level, you should be a little bit more bearish. And so on my chart, what I look for is just certain levels that I printed out over time. And, a lot of the ones that I kind of had the most focus on were, levels from 2025. And so the one thing that I was looking at was the 2025 summer lows, which was about that 98K, and then also the 2025 yearly lows, which was about that 74K. So when I construct like an anchor chart, I don't per se make trades and entries based off of an anchor chart, but I do take it down to the low term time frame and I say, say, okay, if I'm trying to trade the 1 hour or 30-minute chart, my anchor chart is below this level, so then I should be a little bit more bearish or a little bit more cautious on the long side. Or if it's above this level, then I should be a little bit more accelerant towards the long side and maybe a little bit more careful on the short side. But, on what I'm looking at, and this is just from the most recent price action that we've seen really in, since September 2024, the important level for me was the break below the 25 summer lows. And so once we kind of broke below this, it's a weekly chart. So things don't have to transpire right away. There's always an option of it being a deviation and then it saving that level by the end of the weekly close. But once this level kind of broke down, it was kind of like a sign to me that's like, ooh, okay, let's see how this closes. If it's not a deviation, then you need to be a little bit more aggressive on the short side. And then that's kind of exactly what happened. We kind of ranged for a little bit. We retested that 98K, which was basically the exact level of the summer lows. And then we had another extension lower. And now, I was hoping for 75K to hold a little bit. I was, but it just ripped right through. And so that leads me to where we are now, to being below the 2025 summer lows. I'm probably not going to be aggressive on longs until we get back above this level. And so, that doesn't mean that you can't long and still make some money within the meantime, but it's just a reminder for me as an anchor chart that we are below certain levels that are of significance. So even if we retest that 74K area, that should also be an area that you're looking to short next. If you can get back above that area and hold on a weekly close, again, it's going to take some time because those weekly candles close at the end of every week. So maybe it happens on Monday. You won't technically know if it's a deviation until come Sunday. So sometimes you have to have a little bit of patience on these anchor charts to kind of shift biases a little bit. But, as where we are right now, I think it could go lower. I think I am open to a little bit lower. You could get a bounce maybe to short into. But until this level here on the yearly of 2025 yearly lows gets saved and we're back above that, which on my chart it's showing 74,492. Again, it'll vary depending on what exchange you're looking at and all that sort of stuff. I think you kind of play cautious towards this. Again, depending on if it's a 15-minute chart, 30-minute intraday chart, you think it's good for a bounce, you can definitely take that bounce. But again, always be in the mindset that we're still below a significant level of ours to keeping us that bias a little bit bearish. So that would be like the way that I look at it, or that I would kind of help people perceive it, is you got to have a high term time frame anchor chart. That way it can kind of help kind of dial in on those lower term time frames that you're kind of trading. And I think Trader Man makes a really good analogy on this too. It's like when you're playing a video game and you have that full scope, you're looking at the field and it's a RPG first person shooter. You see the whole field. That needs to be your high term time frame anchor chart. And then you can kind of scope in with, the rifle or the gun or whatever it is. And that kind of dials it down into, the 15-minute, the 10-minute chart that you're trying to intraday trade. I just think it's important. And not a lot of people will understand that at first. You can use whatever you want to use. I'm more of a levels guy. I think certain level is important, but you could use like indicators too, like SMAs, EMAs. I know a lot of people have been talking about that 200 EMA or whatever that we needed a retest of, and it may work. Like, no knock on anybody that uses those. I am just like a horizontal level person. And again, I get those levels from the weekly closes, the 2025 yearly low. We get back above that. If we hold on a weekly close, then I'm okay with potentially thinking we could retest that summer lows of 98K and then kind of range from there and then just kind of see what happens. And then you get back above 98K, then you could be a little bit more bullish and start to press longs for maybe an all-time high break. But as of right now, we are still below the 2025 yearly lows. So that's more of like a caution thing, right? Or at least be a little bit more short heavy when we get those retests higher. It just depends. But yeah, I take the approach of having an anchor chart below the 2025 summer low was a perfect break below a specific level to where we should have turned extremely bearish or at least been leaning towards the short side. And I think like the last short that I took on Bitcoin was at 96K. So I was able to capitalize on this move down. And it was basically just formulated from the levels on the anchor chart of 2025 summer lows. So that's kind of the way that I do it and kind of perceive things from a high term time frame anchor and then down to, intraday trading.
A lot of the levels that you explain and that you look at, I look at it in a different way, but it's all the same levels. Like I like to play order blocks. I like to play areas of demand. I like to play around levels that people were clearly playing around. Price clearly reacted there for a reason. Price is going to react there again whenever it comes to. And it's up to you to play price as it comes to that level. So when you were explaining the 98K level, I might not have an order block or an area to play around that level, or I do. And in this case, I had a good weekly level of demand that I had drawn out there. Granted, the first time that we pushed and tried to break above that really 100K level, but we were trading at the 99K level for quite some time at the end of 2024, we eventually broke down below and dropped below that February 2025 level and deviated for quite some time before we accepted and reclaimed that level of weekly demand that I was looking at for another extension upwards. When we were able to reclaim that 90.8K level and start closing those weekly candles in it, I then assumed that we were going to break an all-time high. We eventually flipped that level after breaking the 99.2K level upwards and printed that 125K all-time high level that we saw today. For me, when price came to that level again and we began seeing closures within that weekly order block that I was playing around, that was printed way back at the end of 2024, and price closed below that level, you were able to catch a good short at 96K for the move that we had in that continuation move down to where we currently are right now. You're looking at it a completely different way, but we're playing two of the same levels, just utilizing our own confluences. And I think that's a beautiful way to break it down, is that everybody has their own strategy, their own analysis, their own way that they're going to look at charts, whether it be on the higher time frame or the lower time frame. These levels matter, but it matters to you how. There's certain things that you're looking at, there's certain things that I'm looking at, but we're executing off them on our own terms. And that's what matters. I wanted to break down that analysis because I think it ties in very well with the short that you just explained before we had the move into the current landscape that we're trading in right now. With any economic event moving this market in any given time, how do you keep yourself grounded and more protected?
When it comes to like economic headlines, events, the tariff, the wars, all that sort of stuff. We've had so many headlines the last year and a half, all the way from, the Russia-Ukraine war, all the way to the tariffs. I feel like there's always something new that's coming out. I still kind of am a big believer, and it's all in the charts. It's all within technicals. I try my best to not get too driven on that sort of topic, especially when it comes to like tariffs and stuff, because we've seen a lot of these headlines before. Most of the time, it's a lot of people just kind of reacting to something that they're not really sure they're how to react to. So, a bulk of sells come in or a bulk of buys kind of comes in. So I am on like the big mindset that, look, everything's in the charts. Everything is in technicals. There's always some way to figure out within your charting setups that you can kind of not ignore the headlines, because it is, fairly important to get like, involved with everything kind of going on. I mean, these are markets. You want to know what's going on with, gold and commodities and the stock market and everything. Like, you want to know, but I still am a big believer that everything is in the charts. I think there's a couple of ways that I like to approach it, right? And one of them is always scaling into trades. I like to take like starter positions, right? Meaning, if you take 10% of the overall position size and things do drop against you, you're not taking a massive loss, right? Because then you can kind of understand like, okay, maybe this does deviate a little bit lower. Maybe this does kind of have some lows where you can kind of build those positions. But on my current chart, like, I think it would be one thing, like, look, because I think we were talking about that 64K sweep. So if we do drop to 64K, a form of protecting myself is, look, I would love to long that area, but there is a likelihood that maybe we sweep those lows of 59K, right? But that's also within the bidding area of my discounted prices. So you don't want to make an early position or an early position size kind of take you out. So a way that kind of alleviates me is, being able and having the willingness to dollar cost average as we go lower, because on my chart, it's showing an NPOC level of 64K. And then we also know that the lows is lower limit around that, 59K. So I am okay with building a position within that. I don't like to be in the trying to catch a Pico bottom business. I like to be in the profit making business. So it doesn't matter to me if my first entry is 64K and we wick all the way down to 59K. If I can build an average within that, I call it an area of interest for me to be willing to long. Now, if you go all in with your entire portfolio at 64K and we wick all the way down to 59K, yeah, it might hurt a little bit. So for my way to alleviate it is I just know that the discounted price point is where I want to be building longs. So I'm not interested in catching the Pico bottom. I'm not interested in, having that clout chase on X to be like, oh, I caught the Pico bottom and we pumped 20%. I'm more in the interest of I know between 64 and 59K is where I would like to be building a position. So then I build a position within that area. And then if price does bounce and we do sweep the lows and we bounce all the way back to, maybe premium prices back to above 69, 70K area, it doesn't matter if your entry is 64K or if it's 59K, as long as you have an average in your area of interest, you're able to capitalize on that move to the upside. I would obviously say play caution within that. That's something that I've learned over years on the way that my style works for me. Because, what if we wick all the way down to 54K? That's a bet I'll take every time. And that's a trade I'll take every time. But I also am in the realization that, look, I don't have a 100% hit rate with trading. I know that I'm going to be taking losses, but I also know that this is where my edge lies to be like, well, this is where I'm going to attempt it. If it fails and I lose money, well, I've taken this trade time after time, and it's worked well. I mean, a lot of people say that all the time. They're like, oh, well, what if it goes lower? What if it goes to 50K? And it's like, yeah, you got to understand that it might go against you and it might go to 50K. But at the end of the day, if it rips straight through 59 all the way down to 50K, you may take a loss, and taking a loss is part of the game. It's kind of funny because people will say they have like a 100% hit rate or a 90% hit rate. When I first started learning trading, I knew people that had 55% hit rates that were multi-millionaires, right? It's all about kind of letting your winners win, but then knowing when to cut your losses and say that you're wrong. And so that's kind of like the approach that I take is, I'm interested in building between 64 and 59 because that is a lower limit discounted price point. And I'm just not in the business of trying to Pico catch the bottom. I'm just more of in the business of, having an area of interest that I'm willing to dollar cost average into. And again, don't go all in at once, but still be bidding and building in that area of interest.
I agree with a lot of things you say. And honestly, even without talking about analysis, I think that a lot of people should take a lot of notes to the things that we're bringing up, to a lot of the points we're bringing up, to a lot of the reflections that we're talking about today, because that is time spent in the market. There's a lot of time spent in the market that we have together. We're able to use that to our advantage. There's people that are coming in now that could use that to their advantage. I wish I knew half the things that I did. I wish I knew 10% of the things that I know now when I first was starting, because I wouldn't have lost as much money as I did just to get to where I am now. Although I look at all those as a learning experience. If I wasn't learning, I would not be in the position I am as well.
Yeah, 100%. I mean, it takes time, man. Like, you kind of have to pay your market tuition when you first get started. It's like everything's a learning curve. Very rarely do people get into these markets, start trading them right away, and are profitable right away. It just takes time. One of my mentors at the beginning was like, look, you got to pay your market tuition a little bit. Sometimes that's eating some L's, knowing where those mistakes lie, but it's about kind of fixing those mistakes along the way. Yeah, I completely agree. The people that are coming in, of course, you see people making a tons of money off meme coins and trenches and all that sort of stuff. But I think you and I do a really good job of taking like a realistic approach to intraday trading that many people don't talk about, which is like, hey, small gains add up over time. Knowing where your stop losses is and where your risk is, where your risk tolerance is, all that sort of stuff is in play. And there's not a lot of people that like to take that approach, especially mostly within crypto, man. A lot of people within crypto are just greedy, just wanting to get rich super quick, leave the industry. But Bitcoin trades beautifully, and so does Ethereum. There's really clean moves to both the long side and the downside, and it's just like our job to kind of capitalize on that when the moment presents itself.
I appreciate you coming on, Castillo. It's been long awaited. I know that my audience is going to see a lot of value from your point of view. I hope your audience sees the same, and I look forward to doing analysis with you in the future. Not a lot of moves to talk about today, but a lot of positive and good information and good education that people could get off this video. I wanted people to see an insight of the way that you trade. If you guys do not follow Castillo already, I'm going to leave all his links down below. I appreciate you coming on.
Thank you, boss. Yeah, we'll definitely do this more in the future. And maybe when things get a little bit more exciting, we'll have a lot more to talk about. But, as of right now, I'm glad we were able to jump on the video and chat a bit. I know I'll be seeing you soon.
Absolutely, bro. Have a good night, bro.
You too. Peace out.